Hello and welcome everyone to Gold Asset of the Day for the 14th of December 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So there are two things that we want to state with you today. Number one, buying gold below 1,800 US dollars per ounce has worked out perfectly over the last 24 hours. The second being, at the Gold and Silver Club with all of our clients, we have just banked 10,000 points profit across multiple trades that we've built into over the last 2 weeks off the back of the CPI data that saw gold prices slingshot higher to 1,824 US dollars per ounce. And we've of course been buying over the last couple of weeks into multiple positions on the metals, which has allowed us and our clients to bank a windfall amount of profit just in the middle of December here for over 10,000 points profit. So just to give you again that monetary calculation, for every one lot contract that you'd be trading, that's $100,000 of profit in 2 weeks. And for every 10 lot contract you'd be trading, that's $1 million of profit in 2 weeks. All of these are new trades that have been executed over the last 2 weeks, all of them fresh positions. Go back and watch last week's report. Go back and watch the week ahead commodity report. We talked you through gold is an opportunity to build positions whilst it's below 1,800 US dollars per ounce. And of course, on Tuesday, off the back of the CPI data, gold prices had a slingshot higher, breaking out to 1,824 US dollars per ounce. Not only that, we have seen oil prices that have broken out $5 already at the start of this week, as we talked you through on the week ahead commodity report. Big opportunities down towards 70 US dollars per barrel. That is the level that the Joe Biden administration signaled to the market they're looking to refill their strategic reserves at $70 per barrel. So what happened on Monday? We hit $70 per barrel. On Tuesday, where's oil trading? Above 76 US dollars per barrel. It's broken out $6 to the upside in 24 hours. Yet again, another trade opportunity that we identified with you on the week ahead commodity report. So I can only imagine, like our clients at the Gold and Silver Club, if you're following these reports every week and into the weekends, you're absolutely crushing it at the moment. So definitely give yourself a pat on the back for your profits that you've accumulated over the last couple of weeks here on commodities. And of course, we still have Wednesday's FOMC statement. We still have Thursday's European Central Bank announcement. We still have Thursday's Bank of England interest rate decision. And we, of course, have the quad witching on Friday as well. All of these are going to continue to provide back-to-back opportunities for you to maximize it, exactly as Goldman Sachs, JP Morgan, Bank of America, Citigroup have all stated the final quarter of the year, particularly December, can be one of the most profitable for commodity traders. The dollar index is getting annihilated at the moment. Risk on assets have all accelerated over the course of this week, and we could see a supercharged move as well on Wednesday from the FOMC statement, especially if we see dovish comments from Jerome Powell. The expectation is they'll go ahead with a 50 basis point rate hike as opposed to 75. So this could just further accelerate the move higher that we've got on metals. But either way, we've got it covered. We've banked 10,000 points here off the back of the CPI data on Tuesday. And of course, we're keeping exposure running as well as we go into the back-to-back central bank news items that we have over the course of this week. So really, there's nothing much more to say here because we have talked you through big opportunities on oil to get back around the $70 US per barrel handle. And we've also talked you through gold, big opportunities to get in whilst it's below 1,800 US dollars per ounce. Now, of course, none of this is ever guaranteed. All we're stating to you is what we're looking to do in the markets. And of course, we've maximized it with our clients at the Gold and Silver Club and absolutely crushed it. As you know, 1 in 2 people, they're now turning to trading to beat inflation, to beat the recession and provide themselves with another income stream to absolutely hit the ground running at the end of the year and into 2023. In the words of Warren Buffett, to earn more, you need to learn more. And trading is one of the top skills you can learn in 2022 through to 2023 to improve your current situation and hit the ground running into next year. So again, if you want to learn the professional, research-driven approach to the market, ditch those outdated technical analysis strategies and gimmicky technical indicators. Do me a favor. If you've been selling gold over the month of December, number one, you've been chopped up. Number two, you've been stopped out. Why is it? Why have you been selling gold over the month of December? Every single report we've talked you through has given you further edge here, where we're looking to capitalize on this upside momentum move that you get in the month of December for commodities. So you have to ask yourself, if you've been getting chopped up, if you've been selling gold, or even if you've been sitting on the sidelines, if you've got no exposure to commodities and you've just seen the huge move that we've had so far off the back of the CPI data, and potentially further big moves later on this week off the back of the Fed, European Central Bank, Bank of England, then definitely you need to review your strategy in the markets and make sure that you are trading the correct way, which is utilizing data, market intelligence, and statistics. It's 2022, the age of data. So with that, this is where you need to be utilizing and implementing the daily, the weekly, the monthly, the quarterly, real-time data-driven cycles in the commodity markets. Further align that with the key areas of liquidity for not only entering into trades, but also booking your profits as well. It's very important that you know the levels targeted by the banks, institutions, the money managers, where you're going to get those impulse moves and the major catalyst for those events occurring, which you've just seen on Tuesday off the back of the CPI data. Alongside that, you want to further compound that with the intermarket correlations in the market, the ratios, the key narratives in the market, and the drivers, especially from a capital flow point of view, that will have the biggest impact, allowing you to sniper in and get those optimal entries, and also, of course, banking at the correct point in the cycles as well. Further compound that with how the banks, hedge funds, money managers, and commercials are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.